fluctuations for the import of our products?
So, yeah, I think this is a question we almost get at every call, and it's a very valid question from investor point of view. Our almost 40% products are being imported, and the pricing is normally kept at the current level plus something which is going to cover our future hedging cost, right? Number one. Number two, the inventory what we carry is being the pricing of inventory is being evaluated every week, and based on the current exchange rate, the prices are taken care of. So it's a auto hedge. Third thing, that we also hedge a part of our imports with our vis-a-vis our payment due date. So altogether, everything is taken care of to my future exchange liability.
So it's a combination of partial hedging and partial the inbuilt business parameters where we get natural protection.
Noted. Thank you. Thank you so much, and all the best.
Thank you. We have our next question from the line of Manoj from KSA Securities. Please go ahead.
Sir, this is Manoj Jetwa here from KSA Securities. So my concern is that we are working on a very wafer-thin margin, as we are the distributors for the 60 technology partners. So in future, if some challenges come, so how are we protected against that? So this is one question from my side, sir.
So, if you see, we have widest portfolio of products, like 60 brands, and the portfolio for distribution itself is a risk mitigation, proposition, first of all. Second, dependency of, one brand is, not more than, 23-25%. So, and there also we have, different strategies or long-term relationships in place wherein, there's no visibility of any such risk getting popped up. Thirdly, our engagement with the brands and the penetration into the geography, wherein we have largest network of distribution, provides us that upper edge to mitigate the risk which you are foreseeing or trying to find a solution to it.
And my second question is relating to the artificial intelligence, because many of the products in ICT or LIS things and all that, right now artificial is getting embedded in most of the products. So do you see it would be a good volume-wise also and margin-wise also, we may have some good margins on those products if we distribute such products?
So this is the question closest to my heart, AI. Everyone is talking of AI. And it is true that AI implementation, the pace of the implementation is amazing, but it's also a fact that it is just at the start point right now. So while we speak, we have started receiving few laptops which are AI enabled. There are few solutions which are AI enabled, and the large project order that we have executed is again basically AI data center. So while we are very optimistic and we see big business opportunity coming our way, but it will have its own gestation period, and we are actively engaged in this field as well.
My last question would be our present and future synergies as for the data centers, this artificial intelligence data centers, in relation to NVIDIA companies. Could you add some color on that?
So we are one of the oldest and the largest distribution partner for NVIDIA now for many years, and we hope to continue to work with all these technology companies to bring the solutions to Indian consumer and enterprise.
Thank you. Thank you. That's all from my side, sir.
Thank you.
Thank you. The next question is from the line of Bhavin from Enam Holding. Please go ahead.
Yeah, congrats to the entire team for a record quarter and execution of such large order in single quarter. Few questions first. If I can get a gross debt number and cash number as on June 30th, roughly.
Sorry?
Gross borrowing number and a cash and investment number.
We can share those offline. It's not part of the results which we have prepared. We can discuss that.
Largely the net debt has remained flat quarter on quarter, or is it decline, increase, if you can? I think it was March 24, it was 523 crores net debt. So largely it has declined, increased, whatever. A trend, if you can give.
Working capital gap, if you see, has increased a little bit with increased level of activity. So the balance sheet items, we can take it up offline.
Okay, no problem. So another is, I think, as you mentioned again, two large orders coming really part of the project business, and again, large part of the same would be executed in Q2. So the margin trend again, as compared to the historic margins, would optically look low, particularly because NMDC order is low margin. But what about the Tamil Nadu order? That's a normal part of the business, which is a normalized margin, or do you think that also has a low margin component in that?
So, Bhavin, I don't think we have that luxury of these 100 crore or 200 crore projects at large margin. There the margins are always tight, so it is going to be in the similar range as well. And margin pressure will continue to be there, but as I said earlier, ROIs is what we should look at, and ROIs are of course lower than our regular business for sure.
Sure. And so if you can give a trend in the first quarter and maybe again July and August is also starting, of your key product segment, how particularly the industry is growing, and you yourself are growing in terms of desktop, laptops, drives. A few of the product segments you want to highlight, what are the trends emerging and growth rates happening there?
So I think overall, if I go by the third-party reports, then they indicate that the market was either flat or some part of the market was negative in the last quarter. But at Rashi Peripherals, by the virtue of the variety of products and solutions we have, by virtue of the reach in number of cities and our number of customers, which has both actually grown, which has resulted a decent growth for us. To answer your specific questions, basically what we have done is we have increased our market share because of our penetration. So as a result, I would say in 80% of the product categories we've had growth, barring one or two exceptions, like for example, solid state drive. That market, there is a major price crash happened globally. So that market is actually a little bit degrowth. Second, a bit of component market, which is again not an organized market. So there is some degrowth. But other than that, almost all product categories we've had a double-digit growth.
Okay, so except for these two, you are saying largely you are having double-digit growth across your category. And that too basically has been driven by more penetration, more distribution network,
absolutely,
and slightly higher market share from your competitor. Because again, most of the products also you have been the only distributor or the top distributor. So very difficult to get incremental market share. So penetration has led to more market share.
Yeah, so 20% business, as I said earlier, is like, I would say 17-18% business is exclusive. Rest 80-82% business is non-exclusive business. So there is obviously a scope to get market share as well. But I think penetration coverage is one of the prime key areas for us in having this growth.
Sure. Thanks a lot, sir. Thanks a lot.
Thank you. We have our next question from the line of Forum, an individual investor. Please go ahead.
Hello, I have two questions. Are there any add-on benefits to create separate vertical for visual display business?
Is there any additional benefit for, we missed your word.
Okay, benefits to create separate vertical for visual display business?
Yeah, definitely, because if you have a separate vertical, you have separate team, then they are trained to manage that respective business, and then there is more focus and attention, and therefore you tend to get higher success, and that has been our strategy. I cannot comment about others, but that's our strategy.
Okay, the other question is, are there any margin difference in different distribution channels?
Yes, amongst the channel, LFR and online, margin percentage varies.
Okay, that's it from my side. Thank you.
Thank you. The next question is from the line of Neha Jain, a shareholder. Please go ahead. Miss Neha, are you there?
Hello.
Yes, please
Hello.
go ahead with the
Yes.
questions.
Thank you, sir, for taking me again. I just wanted to check what is our split between the metro and non-metro, and how do we see it going further?
Yeah, so I think, Neha, to answer your question, to be very specific, we have 60-40 metro versus non-metro ratio, and depending on the season and depending on the project, this keeps on varying. Of course, currently this quarter, because of the large one or two projects, the metro seems to be higher. But I am sure in July, August, September, which is Q2, which is more a consumer quarter, again it will come back to around 60-40. And that's what we think is realistic.
So it's annualized basis mix, it will be 60-40 is what we feel.
Yeah.
Okay, sure, sir. And so just one last question about the mobile distribution segment. As we are aware that the competitor already has good presence in this segment, so can we expect any such move from our company?
So we take pride in saying that we are probably the only one and unique distribution company which is committed to ICT. So we are an IT distribution company. However, while saying so, even during the IPO stage, we were asked these questions many times, and we said that considering the overall margin and the opportunities, we will evaluate as and when it comes. But currently, in the ICT, you can see our growth almost 40% plus. We have enough on our plate. While we speak today, you never know what comes opportunities tomorrow.
Sure. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, that would be the last question for today, and I now hand the conference over to Mr. Rajesh Goenka, CEO of Rashi Peripherals Ltd, for closing comments. Thank you, and over to you, sir.
Thank you so much, all our investors, family, and friends. It was good to talk to you. I hope we are able to give you some vision for Rashi Peripherals. And on behalf of myself, I also want to thank Adfactors and our entire management team sitting here and helping us to answer your queries. Thank you so much, all of you.
Thank you. On behalf of Rashi Peripherals Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.